Welcome back, guys. Welcome back to Traders Empire. This is your host, Trader X. You know what it is. Yeah. On today's video, guys, we are simply going to, reflect back on the previous video that we had, on which we focused on zone to zone trading. This just to recap on what really happened after we shot that video. Um, I'm pretty sure we had already experienced this movement. Let me go to H4 because I was mostly using H4 time frame. I'll come back to H1 just to explain a few things there. So that's exactly what was going on. We hit the market all the way there by this zone. So what really happened was that the market rejected the zone, and then it came, it like it broke this uh, zone right here, and then it came and rested on this zone. And now the rule around this approach or this strategy is that you wait for a break and close below or above a point of interest. So a point of interest, guys, is these zones. Once you have identified all these zones, don't leave anything behind. Just make sure that you try by all means to track down the activity of the market, what the market is trying to do. The market is actually communicating with us and it's telling us that no, this time around I'm going up. This time around I'm going down. The sellers are in control, or the buyers are in control. So all that is reflected on these candlesticks right around these particular zones. So if you leave a particular zone behind, it means that even in future, the market may come back to that zone, and you may have maybe greater expectations. Like for instance, if we didn't mark this zone, we were obviously going to think that the market is going to move from this zone. If it breaks below and closes below this point, it means we are going to come to this point. But for the fact that we identified this zone right here, it acted as a support structure. Now, the rule that we have set for ourselves is that once we get a break and close below or above a point of interest, so this wasn't a break and close, it was a fake out. So make sure you don't get caught up in these kind of instances. And again, I like using bigger time frames because these bigger time frames, you don't get caught up in these fake outs more often. So yeah, it's still the same thing as we didn't break and close below this zone. As a matter of fact, what happened was we made a fake out and came back into the zone. So all this movement right here, all this movement, it was influenced by the fundamentals. So we'll talk about fundamentals on our next video. So as for now, I like using these two time frames right here. This H4. It's not like it's stationary that you should use these two time frames. You may choose certain time frames that suit your strategy, or that suit your trading account, or that suit your risk appetite, or whatever, but just make sure that you place a set of rules that do apply, that don't get you caught up on the wrong side of the market. So this is what is going on right now, guys. This is what is going on. So once we get a break and close below the zone, then we are selling to the zone. And if we break the zone and close below it, we are coming to this zone. But if we reject this zone, it means you are coming back here. Mind you, we'll be making a series of what? Lower highs and lower lows. It's the way the market operates. It goes to a discounted price, back to a premium price, back to a discounted price, making that wave that we are talking about. Some of traders will call it return to order blocks. Some of the guys will call it these lower highs and lower lows. It's all the same, guys. It's all the same. So don't get too confused about the terminology of the market. This is just a way of expressing how you view the market. But make sure that you create a certain strategy that works for you. So in my opinion, guys, this strategy is most suitable for NASDAQ. So if you keep on practicing the strategy, you may find yourself, being a profitable trader. So yeah, guys, that was it for today. I didn't want to make this video a long one, because I just wanted to share with you what really happened and how the market is continuing respecting the zones that we have marked. So if you haven't seen the previous video, guys, I advise you to go back to the previous video about zone to zone trading, and start afresh there, and then continue with this one. So with that being said, guys, thank you guys for watching. See you on the next video. Yeah, man.